All right, everyone. Good morning. It's June 6th, Wednesday, a little bit after 9 o'clock. I apologize for the delay on this particular video. My last recording just had some kind of error, and the computer told me that it was dead, so I've got to do it again. We're looking at this flag pattern forming. Remember I was talking about this yesterday. This is very, very typical, and if you watched the webinar series I did on how to amaze your friends by picking reversals days or even weeks in advance, this is exactly how. This is very typical of the market coming into support here. So because of this, I am looking to go long above 1.9950 as the market pushes up above this resistance line here and stopping out below 1.9920, which is right below this level here. Now keep in mind though that it's very important that the market pushes through with momentum. So you want to keep your eye on the 15-minute bar, and if the market pushes through but then immediately starts to trade back down, the prudent thing to do is just to exit the position. Remember, stops are not in place to just let the market hit them without even thinking about it. This is a momentum-based trade, so for me, if the market is going to turn around very quickly, I'm not going to just keep my position in there if the likely direction is no longer up. And I'll give you an example. Here you can see the market. I apologize for the missing data here, but here you can see the market pushes up. Let's say it broke through and triggered a trade here, but then you can see for 15, 30, 45 minutes, the price just really doesn't go anywhere. It drops by about 10 pips here. And my stop would of course be right back here as well. So there's no reason to let the market come all the way down here and stop me out, especially if this is a momentum type of trade, which it is. So in this case, I'm probably just going to get out when the market's up here and wait for a better entry. So if the market comes back up in here, breaks this high, then you know what? I can get in again. There's no reason why you cannot just put yourself back in there, especially if the position and the pattern is still in place. Let's go up to the daily bar, get some perspective here. You can see, if you remember, we've been talking about this particular trading lane that the market has been in for the last several weeks. Pushing up to probably a high of 2.0650. We've also got a bit of a tunnel pattern forming here from this low to this high here. What this particular pattern is showing a high here right in the 2.0620 level. So this is lining up right along with the highs. Remember, we've got to go all the way back into the 1970s, but it's lining up with the highs nonetheless. If we look at the 240-minute or the 4-hour bar, you can see that short-term trend has started to push back up. So we've got higher lows, higher highs. Short-term trend is now up. Mid-term trend is up. So we've got the three trends pushing up. We're looking to simply go with this momentum here. So we're looking to take trades to the long side, not necessarily to the downside, simply so we can stick with the momentum that's already in place.